Inflation rates are at their highest levels in over 30 years. Is it time to get rid of stocks and invest in bonds? What's up everyone, my name is Jonas, welcome back to my finance channel. In October of this year, the annual inflation rate in the USA has reached 6.2%, the highest score since 1990. This 6.2% inflation rate was also pretty unexpected. The forecasts were around 5.8%. The upwards pressure is broad-based, mainly supported by the rise in energy prices, which clocked in at 30% year on year. The biggest rise is found in the gasoline market, with an inflation level of 51%. Last year, oil prices dropped like a stone, and at some point the prices of futures were even negative. The gradual reopening of the economy causes the demand for oil to rise again, with huge inflation levels as a result. From next to no demand to a rather normal demand, that causes a huge rise year on year. But if you look at the bigger picture, demand is still lower than it was in 2019 or before. It will take a while to get back at pre-pandemic levels. But not only the energy market has a lot of inflation, also beef, bacon, eggs, furniture, hotels and cars can see a big price rise compared to last year. As long as demand is recovering from the pandemic, inflation levels might continue to grow. Most governments had hoped that inflation would abate by now as the economy is reopening. But the supply chain upsets and greater demand than supply keep boosting the fuel, food, rent and energy prices. We might have a longer period of time with higher inflation, up to a point where the central banks will be forced to raise interest rates to fight the rising inflation. Higher interest rates will in turn make loans more expensive, and they will push down on the stock markets. With higher interest rates, companies will have to pay more for their loans, and they will be limited to invest in their future. On the other hand, bonds will have a higher return, and they might become more interesting to invest in. And even on personal levels, this will have an impact. If your personal or mortgage loan will become more expensive, you won't have as much money to spend every month. The demand will go down, and this will push inflation down as well. Life in itself will become more expensive, and we will have less money to invest in our future. So while you still can, save your money and invest it. When the times get tough, you'll be very thankful you managed to save and invest. I will also be very thankful if you were to like this video for the YouTube algorithm, and if you were to support the channel by subscribing to it and hitting the notification bell. I thank you very much for watching, and until next time.